Inflation in the U.S. slowed to a 6.5% increase in December, marking the sixth straight monthly deceleration since a mid-2020 peak. But what does that mean for investors as they navigate through volatility? Joining us to break it down now, we've got Matt Quinlan, portfolio manager for Franklin Equity Group, and also Franklin Rising Dividends Fund and Franklin Equity Income Fund manager. You wear a lot of hats, Matt. Help us break it down. How can people navigate through some of this volatility?
Great. Well, thank you for having me. We think a great way to protect yourself. We do see some challenging times out there with inflation easing, but still at very high levels. We do see some challenges out there with slowing growth, really from the lag effect of significant rate increases over the last 6 months or so. So we do think there's some delay in the impact that people will see. So it'll be impacting corporate profitability, and consumers are certainly seeing some stress. But we do think an area for opportunity remains dividend-paying stocks, in particularly high-quality companies with less debt, often benefiting from having large markets, really good, resilient business models, free cash flow generators, and companies that can reinvest in their business in times of like we're in today, a little tougher time. So we see some opportunities across sectors, but we do see some challenges for 2023.
Are those quality names harder to find right now?
I think there are still opportunities across sectors. So we see opportunities in places like energy. We see opportunities in healthcare, services, medical devices, even parts of the financial sector, the private equity firms, which have a lot of uncommitted capital, but capital that's been committed to them by their investors. So we see a lot of opportunities across sectors. We like to say we're not investors in the market, but really in select opportunities for companies that we've identified as being high quality, having good management teams and businesses that we think can really hold up over time.
Matt, when you see a JP Morgan on their earnings release call out a potential mild recession and they're planning for one, does that make you quake in your boots, though, with some of these theses?
No, I think we're not macro strategists per se, but we are aware of the conditions that are out there. We are seeing slower growth. We are seeing, while corporate profitability has been good and consumers are in good shape, we are seeing some weakening trends. Those comments from JP Morgan are not surprising. So we are mindful of that. I think where our focus is really on the opportunities for our company, and really thinking about, what are the range of outcomes for businesses that we've identified as long-term winners. So we are seeing some slower growth, signs some stress within the consumers, shopping less frequently, trading down, those types of things. So not a surprise in terms of the commentary from the banks. Things are still holding up well. You're starting to see some layoffs, not big numbers, but certainly in the headlines. So all things that we're aware of. And we're certainly thinking about as we review companies in our portfolio and companies that we're considering for investment.
We appreciate the analysis. Matt Quinlan of Franklin Equity Group. Have a great weekend. We'll talk to you soon.
Thank you. Thanks for having me.